Hello there, hope you're all doing well. Welcome back to another lecture video. In this one, we're going to be continuing to build on the MMX strategy, which I revealed to you guys in the last video, because there is one key aspect that we need to apply to our trading strategy, and that is time. Without time, we simply cannot take any trades, we cannot look for any trades, we can't know what the market is going to do. So to implement time with your trading, I've come up with a simple 6-step strategy that you combine with the already existing market maker model strategy. And this is specifically for your entries. This is not to look for the higher time frame. This is not for framing your market maker model like we did in the last video. Instead, this is going to be about timing your entries. And that's why I've made this 6-step drill. All right, so as you can see, I have gone ahead and put all the steps that I've included inside of this protocol, entry, strategy, whatever you want to call it. And we're going to go ahead and explain them briefly, and then we're going to look at some live examples to actually showcase what I'm talking about. So number 1, SMT creation. This one is quite simple, and I'm sure many of you already know what SMT is. And if you don't, I highly suggest you watch my video on SMT, because it's going to explain the types of SMT that we have and what to look for and what exactly it is. But essentially, we're going to need an SMT at the base of all of our executions. So at every single SMR, like we talked about in the previous lecture, we're going to need that SMT to be there. And that's also the first step of this time protocol, same as it was included in the market maker strategy already. Next step, we're going to be waiting for the liquidity to be retaken. And the liquidity is the one that we had SMT with. So it's the low or the high that was taken, but not on the other pair. So we're simply going to wait for the pair that took the liquidity, that created the SMT, to retake it. And what do I mean by that? I mean closing back above it. So you have that old high or low, we're going to wait for price to close back and show us that it's willing to reject at that area. So we're looking for that 1 minute liquidity to be closed back above or below. Step number 3, we're going to need a cycle high or low to be reclaimed. And preferably, this should be the same cycle high or low where we retake the liquidity. So it's the same candle. We're talking about the 1 minute here, because we're using the 1 minute, like I said, for our entries. This is simply an entry model, okay, that you need to combine with the previous MMXM strategy so that you can understand the whole picture and actually know when to apply this specific entry. When we have a high or low of a cycle, for example, a 90-minute cycle, we need that high or low to be retaken just as we did with the liquidity. We're going to prefer for that candle, the high or low, to be closed back above or below. And the reason for this is that sometimes you can have the liquidity get retaken, but then a few minutes later, price still goes lower or higher, and it's just going to disrespect that reclaimed because it's not confirmed. So we're using this to apply different stages of confirmation. Imagine just how a algorithmic protocol would be, where you have a step 1, you have a step 2, step 3, and we need all of those steps to be followed. And this is to add on to our confirmations that are already existing. So once we have that cycle high or low reclaimed, close back above or below, we then look for a left side array to get disrespected. Now, what do I mean by left side array? I mean a PD array that formed on the left side of the curve, which we talked about in the market maker model video. On the left side of the curve, where we anticipate our SMR to form, we have PD arrays that form on this leg lower. We need at least one of those to be disrespected. Preferably, that should be an inbound, as it's the easiest one to spot, essentially. So once we have that left side being disrespected, we need a right side array to be created. This is the same thing. We either want an imbalance, like we say, we disrespect one, and now we want one to be created on the right side to potentially confirm that we have our SMR, smart money reversal. Or you can have a breaker, for example, created after you start disrespecting the arrays. So we need to see that, and this is what ICT talked about as well. We need to see that left side array, one of them fail, and a new one get created and respected. This is all adding up to our confirmation, and it is all time-based because we're timing it around the SMR, and you'll see in a second when we combine it with the time cycles how it actually works. And then the final step is simply your entry, which should be inside of the macro. And this would be your XX45 to XX15 time window, which XX you can replace with any hour. So any hour of the day, as long as you have these things combined with your knowledge from the market maker strategy and you're aware of where we are and you anticipate an SMR, you use these time-based concepts to frame your entry. All right, so let's go ahead and look at an example here. This, as you can see, is our 90-minute cycle from PM. We have our PM accumulation, manipulation, and distribution. So this occurred around 1 o'clock. And this whole entry model works for every single cycle. It just depends on what you get and at what time things form. But this is a very clear example of what I'm talking about. Now, do you have to follow these things in the exact order that I've written them down? No. The only reason I've actually written them down like this is so that you know the sequence of which you would prefer these things to occur. But you can simply apply this logic and look for all these things as a checkbox, so to say, and simply just wait for all of them to have occurred, and then you can enter on the last step. So let's walk through this example here. Number 1, SMT creation. Using the SMT detector here, you can see we have SMT with ES. This means that at this time, ES, which is the correlated market to NQ, it took out this low right here. And so let me go ahead and pull up ES. As you can see right here, ES took this low. And what do you see? It rejected and closes above. So that means we have our liquidity retaken. So we can confirm this. So knowing that we have our liquidity retaken, now we want to see a cycle high or low get reclaimed. And as you can see, this entire candle at 12:36 is the 90-minute time cycle low. So as you can see from this line, price closes above it here. So we have reclaimed this entire time cycle low. And so what do we wait for then? Left side array to be disrespected. I've marked out this imbalance here. But as you can also see, we had this imbalance down here. So this is what I mean by you don't necessarily need to follow this in the exact order, except for number 1 and 6. 2, 3, 4, 5, these can happen at a different time. 2 should preferably come right after 1, of course, but the cycle high and low, the left side array, right side array, the importance is that we have them, okay? So you can see we have that here technically, but we also get it up here. And the reason I use this one is because it happened perfectly aligned with number 5. So we have the left side being disrespected, and then as you can see, I've gone ahead and marked out this candle right here. This is your number 5 because we have a breaker here. So when price is going down here, you don't do anything because you're simply waiting for that right side array to get created. As you can see from this run, we didn't have anything. So we wait and we wait for price to right here. You can see the imbalance gets created here. Now that's a good confirmation as well. That technically counts as your right side array. Go ahead and highlight that. Well, you can see it follows the sequence perfectly. We create it exactly at number 5 when we're supposed to see it. We see it get closed above, and this is your market structure shift pattern, which you might be familiar with. So it's already high confluence, and you already know that this imbalance, you can use that as your right side array being created, but at the same time, you would have to see price retrace into it to actually utilize it as a macro entry. So regardless, you would have had to wait. So you wait here, and then you simply wait for price to retrace into it, which it does right here very nicely. And that is your macro entry, 13:15, the final minute of the macro here. Now you might be thinking, okay, well in this case, the run was quite, and you see that if we zoom out, price continued higher. Eventually here, you already have almost a 40-point run for a late PM. And like I said, this is just an example. Of course, you want a cleaner move, but even when price is doing this, your idea is valid. And so what's important here is the fact that you monitor your market maker model that you're trading, because in some cases, you might consider this to be your original consolidation, this left side, smart money reversal, right side. So you have to monitor this high, how we trade there. Maybe you take some partials if you got a good entry here, and you simply monitor the reaction. Once it's displaced, does it get close below again? Do you see a setup forming against the idea? Clearly you see that here. So it's not good, so you monitor it. But the point is that this sort of sequence that I've laid out for you here, these things that should happen, that you should look for, they usually occur in every single smart money reversal. And that's the beauty of it. I've laid out something here that you can follow, combined with your knowledge of the market maker models And you can even apply it to lower time frames if you want to get fractal with it and be really precise. And you can see that in this case, maybe you traded, this market maker model on the 15-second. You found all these signatures on the lower time frame, and you were able to catch a large move, right? So the point is, you want to combine your knowledge of smart money reversal, where it's happening, with what time things should happen, and the things that should happen before your trade is allowed to take place. So these are all elements of time. I hope you understood what I was trying to convey here in a simple way. And like I said, follow number 1, preferably 2 and 6, 3, 4, 5. You can kind of switch these around to see what happens, but there's a reason why I put them like this. So if you want to follow it to the T, that's my recommendation. But regardless, you can see it's quite powerful when you start combining these things with your already knowing that you have your left side of the curve and you're going to create the right side. And everything starts with an SMT. So I hope this video was helpful. And if you have any comments or questions about this, feel free to put them below. So hopefully I'll be able to answer some there and try to clarify a few things. But I hope this made sense and that you got something out of it. Of course, this is a very simple example, just a one time, but I invite you to actually look at your SMRs and see if you can find these things. If you see that they happen, what order do they happen in? What confirmed the SMR and what made price move lower or higher sharply? So with that being said, I hope you enjoyed, and I will see you in the next one.